Good morning. Welcome to Principles and Practice of Auditing online classes. In this session, I'll be explaining to you all types of audits. Audit is broadly classified into four different types. First one is classification on the basis of organization. Second one, classification on the basis of functions. Third one, classification on the basis of approach. And the fourth one is classification on the basis of audit dimension. So now we will discuss in detail one by one. Now let me explain in detail the first type, that is classification on the basis of organization. So the classification on the basis of organization is further classified into four types. The first one is statutory audit, second one is government audit, third one is non-statutory audit, and the fourth one is private audit. So now we will take up the meaning of statutory audit. Statutory audit is compulsory audit prescribed under statute or prescribed under any law. Certain business organizations or institutions, audits are mandatory. Such organizations come under this category. In this type of audit, the rights, powers, duties, and responsibilities of auditors are laid down by the statute or by the law, which cannot be altered by the client or auditor himself. It can be conducted only by a qualified chartered accountant. That means to say that statutory audit is one which is compulsory for some of the organizations which are established under statute or which are established under the law. Example of statutory audit are, the first one is companies, that is joint stock companies. Auditing of joint stock company accounts are compulsory under Companies Act 1956. And the second type of the organization which required statutory audit is banking companies. So in banking companies, that audit has to be done under Banking Regulation Act 1912. And the third type of organization is cooperative societies. So in the cooperative societies, the audit process has to take place according to the Cooperative Societies Act 1912. And the fourth example of statutory audit is insurance companies. In insurance companies, the audit will be conducted as per the Insurance Act 1938. The second type is government audit. Government audit is a control measure for public accounting of government funds. I'll repeat it again. Government audit is a control measure for public accounting of government funds. It covers the audit of all expenditure and receipts done by the executive and audit of commercial accounts maintained by public enterprises. Public enterprises are classified under three categories. The first one is department undertaking. Second one is statutory corporations financed by the government, and government companies set up under the Companies Act 1956. Now we will see who conducts government audit. In India, the Accounts and Audit Department of the Government of India, headed by the Auditor General of India, carries the audit work. The CAG's duties have been specified by the Comptroller and Auditor General's Act 1971. I'll repeat it again. In India, the Accounts and Audit Department of the Government of India, headed by the Auditor General of India, carries the audit work under the government audit. The CAG's duties have been specified by the Comptroller and Auditor General's Act 1971. And the third one is non-statutory audit. Non-statutory audit, it is also called as voluntary audit. They are not compulsory under any law. That means conducting of audit is not compulsory under any statute. It is carried at the discretion of the proprietor. The terms and conditions of the audit are determined or established as per the agreement made between the auditor and the proprietor. So in simple terms, we can say non-statutory audit is the audit, which is also known as voluntary audit. So voluntary audit is not compulsory under any of the law in India. It is carried at the request or at the discretionary powers of the proprietor of that business organization. All the terms and conditions of this kind of audit is laid down in between agreement made between the proprietor and the auditor. Example of this type of audit is financial audit of the sole trader and partnership firms. This voluntary audit also covers non-financial audit, internal audit, management audit, social audit, and also it covers operational audit. And the fourth type is private audit. Private audit are carried out at the behest, that means at the request or at the order of the interested parties and not to fulfill any statutory requirements. The terms and conditions between the client and the auditor defines the scope of latter's work, that is the scope of auditor's work. So we can say that private audit is one, so which is carried out at the request or at the order of the interested parties to fulfill their own requirements, not to fulfill any of the statutory regulations. Example of private audit is sole proprietors, partnership firms, auditing of certain individuals such as rent collectors, estate managers, etc. And non-profit organizations such as schools, hospitals, clubs, etc. get the accounts audited for various reasons. Some of these are to meet the requirements laid down by the internal rules and regulations and to ensure reliability of the financial statements and derive related advantages. Now we will move on to second main classification, that is classification on the basis of functions. Audit on the basis of functions performed by an auditor is again classified into two types, internal audit and external audit. Let me tell the meaning of internal audit. Internal audit is a type of audit conducted by the own staff of the organization, specially assigned for that purpose. In this type of audit, thorough examinations of the accounting transactions as well as the system according to which transactions are recorded or conducted. It is done to verify the reliability and authenticity of the financial accounting and other records presented to the management. The scope and objectives of this type of audit is vary widely and are dependent on the size and nature of the business. In simple terms, we can say internal audit is the type of audit which is conducted or which is undertaken by an employee of the organization who is appointed for the purpose of doing so. Here, the auditor will check all the records thoroughly in order to identify the authenticity and reliability of the financial accounting, and the same is presented, the results are presented to the management. Internal auditor, he is an employee of the organization, so he is not an outsider. So he is the employee and who is appointed for the purpose of verifying the authenticity of the books of accounts. The second type is external audit. It is a type of audit performed by the auditors outside the business organizations. They are no way related with the preparation of accounts or management of the organization. The qualified chartered accountants are appointed as an external auditors of the organization. This audit is conducted in order to fulfill the legal requirements of the business. The various procedures relating to this type of audit is laid down in concerned statute, or all the rules and regulations of this kind of audit it is mentioned in the concerned law of that particular business. I'll repeat it again. External audit is an audit which is undertaken or performed by an external auditor who is appointed from outside. He is a qualified chartered accountant. He does not have any connection with the organization or with the preparation of the books of accounts. Now we will move on to the third main classification, that is classification on the basis of approach. So this classification on the basis of approach again subdivided or subclassified based on the time, based on the scope, and based on the object. So at the first we should take down, let me explain. So what are our different types of audits based on the time? Based on time, again audit is further classified into three types. First one is continuous audit, second one is final audit, and the third one is interim audit. So let me tell the meaning of continuous audit. Continuous audit is defined by R.C. Williams as it is a one where the auditor is constantly or at regular intervals engaged in checking the accounts during that financial period. I'll repeat it again. The definition given by R.C. Williams. He defines continuous audit as it is an audit where the auditor is constantly or at regular or irregular intervals engaged in checking the accounts during that period. That means under continuous audit, the auditor he keeps checking the books of accounts either in regular intervals or on irregular intervals. So continuous audit means an audit which is undertaken at regular intervals throughout the accounting year. Generally, the audit work begins after the accounting year is over. But in case of continuous audit, the work begins at the accounting year itself. That means to say that this continuous audit is undertaken since from the beginning of the financial year. The second type is final audit. It is also known as periodical audit. It is generally starts after completion of preparation of all the books of accounts in the business organization. Here, the danger of alteration of figures or manipulation of accounts is completely or totally absent. Generally, final audit starts after the close of the financial period. There is very little impact on prevention of errors and frauds by way of moral checks. It is best suited for small and medium-sized business. It saves in terms of time, energy, and money. The next type of audit is interim audit. Interim audit is an audit conducted in between the annual audits. I'll repeat it. Interim audit is one which is conducted in between the annual audits. It is conducted to find out the interim profit and to know the financial position at the end of a part of the accounting year. That means if at all a business organization wants to know the profit in between the financial year, that is once in 6 months, or after the end of the 6th month, if the business organization wants to know the profit, so then interim audit can be conducted. For example, an audit of accounts prepared for the period of 6 months from 1st April to 30th September would be an example of interim audit. Interim audit is conducted in the following cases. First one is whenever business wants to know the quarterly results of the organization, it can conduct interim audit. When an interim dividend has to be declared by the organization, that time it can conduct interim audit. When the business is sold to some other business, that time it can conduct this type of audit. And when the business changes the firm, that time also internal audit can be conducted. Now we will discuss the audits based on the scope. Based on the scope, again the audit is further classified into complete audit, second one is partial audit, and the third one is detailed audit. First, let me explain complete audit. Complete audit is the type of audit where the auditor is required to check each and every transaction recorded in the books of accounts. He has to examine each and every voucher, document or correspondence relating to the transaction. This type of audit is not possible for large scale organizations. The complete audit is one under which the auditor has to verify or to examine in detail all the vouchers, every voucher, document or all the correspondence relating to that particular transaction. So this kind of audit is not at all possible for large scale organizations or large sized organizations, because there the volume of transactions will be more, the number of transactions will be more as such. So this complete audit cannot be undertaken in large scale business organizations. The next type of audit based on the scope is partial audit. In partial audit, the auditor is not required to examine all the books of accounts. He can examine only a part of the accounts or some transactions as desired by the clients may be scrutinized. Auditor has to state the area covered in that particular audit. So this type of partial audit is not allowed in case of statutory audit, or this type of audit cannot be followed in the case of statutory audit. So in simple terms, we can say partial audit is a type of audit where auditor need not examine all the books of accounts. So he can audit or he can verify only a part of the accounts, only some transactions as desired by the clients, as asked by the clients. The third type of audit based on the scope is detailed audit. Under detailed audit, few business transactions are examined in detail by the auditor. Spicer and Pegler defined detailed audit as an audit which starts with books of prime entry and ends with the balance sheet. The checking sequence is arranged in order to recording the transactions in the primary book. I will repeat the definition again. Spicer and Pegler have defined the detailed audit as an audit which starts with books of prime entry and ends with the balance sheet. The checking sequence is arranged in order of recording the transactions in the primary book. Thus, for the purpose of detailed audit, certain transactions are traced through various stages from beginning till the end with the help of available evidences. This technique of examination is also called as audit in depth. Say for example, detailed audit of purchase of goods for inventory would consist of tracing the transactions through all the points of transaction cycle from placing an order to buy the commodities or for the purpose of purchasing the goods till the verification of final payment voucher. In between these two, if they verify all the transactions in detail, it is called as detailed audit. So, under a detailed audit, only few business transactions are examined in detail, thoroughly by the auditor. Now let me take up different types of audits based on an object. Type of audits based on object, we have first one balance sheet audit and second one occasional audit. Let me explain the meaning of balance sheet audit. Balance sheet audit is an American terms which means verification of the items appearing in the balance sheet. It includes verification and valuation of assets and liabilities appearing in the balance sheet. Under this type of audit, profit and loss account is not given much importance and only the items which are appearing in the balance sheet are thoroughly verified by the auditor. Under this type of audit, the auditor assumes that there is a reliable system of internal check and internal audit system in an organization. Balance sheet is also referred as limited audit. I'll repeat it. Balance sheet audit is also referred as limited audit. Such a type of audit is used where the size of the company is very large. Under balance sheet audit, accounts are verified and tests are imposed only on those items in profit and loss account which are directly related to the assets such as depreciation, repairs, bad debts, etc. That means under balance sheet audit, all the items appearing in the profit and loss account will not be verified, will not be checked by the auditor. Only those items which have influence on the balance sheet like depreciation, bad debts, repairs, etc. Only these items are verified by the auditor. The second type is occasional audit. This audit is carried out according to the occasional needs of the business of the client. It is done at the specific desire of the owners of the business where the audit is legally not compulsory. That means under occasional audit is undertaken as per the needs and requirements of the client. It is not legally compulsory. Under this method, the auditor will conduct the audit according to the terms and conditions and terms and references laid by the client. And his report will mention the terms of references as per the letter he has received from the client. Now let me explain fourth main classification, that is classification on the basis of audit dimension. So this classification is very important. So again, this classification is further divided into the following types of audits. The first one is tax audit, second one is management audit, third one is cost audit, fourth one is systems audit, fifth one is cash audit, sixth one is social audit, seventh one is performance audit, and eighth one is secretarial audit. Now let me explain one by one. First let me take up the tax audit. First one is tax audit. So in India, statutory audits as well as the cost audit are taken up as a result of specific provisions contained in the Companies Act of 1956. However, a new concept of tax audit has been evolved lately under the Income Tax Act 1961. In India, the Indian Income Tax Act 1961 provides for compulsory audit of accounts of certain assessees whose turnover or receipts exceeds the specified limit. The Income Tax Act has provided for rules and regulations regarding the tax audit. That means to say, in India, tax audit is compulsory to those organizations whose turnover exceeds specified limit or their receipts exceeds the specified limit, and all the regulations to carry out the tax audit, again it is laid down under Income Tax Act. The tax audit can be undertaken by the participating member of the Institute of Cost and Works Accountants of India. For tax audit, there are no specific rules laid down by the Chartered Accountants Act 1949. But from time to time, the Institute of Chartered Accountants of India issues certain guidelines regarding how to conduct the tax audit. The objective of such audit is to assist the tax authorities in determination of correct tax liability of that particular organization. The tax auditor has to report about the transactions which have an effect on fixation of the tax liability. That means to say that under tax audit, the auditor has to calculate how much tax that particular business organization has to pay to the tax departments. Now, let me take up the second type, that is management audit. Management audit involves examination of the plans, policies, procedure, method and strategies, and evaluates the performance of management with a view to know or to improve the organizational effectiveness. It does not look into the past, present, but also it looks into the future. In simple terms, management audit means auditing of the plans, policies, procedures, methods and strategies of an organization in order to evaluate the performance of the management with an intention to see the organizational effectiveness. The scope of management audit is quite comprehensive. It involves critical review of all aspects and processes of management. It also includes the objectives, the plans, the organization structure control, and any other specific functions assigned by management from time to time. It includes the appraisal of the decisions taken by the top management in achievement of organizational objectives. The management audit revolves around the following factors, or it involves the following steps. I'll repeat it. At the time of undertaking the management audit, the auditor has to follow the steps. So the steps are like this. Point number 1, he has to identify the objectives of the organization, and the second step is he has to break the overall objectives into targets and plans. Third step is he has to review the organizational structure, and then in the fourth step he has to examine the performance of each functional area. In the fifth step he has to check the delegated authorities are not exceeded. In the next step, the auditor has to audit the integrity of the information system. Then in the next step, he has to assess the efficiency with the utilization of resources. Then in the last step, he has to suggest a realistic course of action on the basis of the examination. Next, the third type of audit is cost audit. Cost audit simply means the audit of cost records. In other words, it refers to detailed checking and verification of correctness of cost accounts, costing techniques and systems in the organization. It acts as an effective managerial tool for detection of frauds, errors and inconsistencies of the costing records in an organization. So, cost audit simply refers to thorough verification of all costing records in the business organization. So, we have fourth one is system audit. System audit refers to an audit concerned with evaluation of accounting practices which is directed to ascertain whether they are up to date. It involves ascertainment of whether the existing accounting practices are required to be modified so as to carry on the work quicker, better and at less cost. So, in simple terms, system audit is one where the auditor will evaluate prevailing accounting practices of the organization and he will ascertain whether that accounting procedures or practices what they are following are up to date. If it is not up to date, he will suggest to have a advanced method of accounting practices. When he suggests to modify the existing accounting practices which leads to less cost, better performance and which consumes very less time to follow in the organization. The next type of audit is cash audit. Cash audit involves the evaluation of all the transactions of the organization for a given period of time. In this type of audit, the auditor will check all the cash receipts and payments with the vouchers and documents which are maintained in the organization. That means to say that in simple terms, cash audit is the audit where the auditor will thoroughly check all the cash receipts and payments which are made in the organization. And the sixth one is social audit. Social audit is the type of audit which concerned with the examination of the performance of an organization or an entity towards the fulfillment of social obligations. The purpose of this social audit is to present the organizational image among the public as to how an organization has discharged its responsibilities to the society. In simple terms, we can say that social audit is the audit under which an auditor will evaluate the performance of the business organization towards the society. How that particular organization is working for the betterment of the society, he will ensure in his audit report. The next type of audit we have, that is performance audit. Performance audit is the type of audit under which an auditor examines the growth of the organization in terms of its production, sales and profitability of the organization. The purpose of conducting performance audit is to know and to evaluate and compare the optimum return with the amount of capital invested. That means to say that under performance audit, the auditor will examine all the aspects which relates to the sales, production and profitability. The purpose of conducting this audit is to evaluate and compare the optimum return, how much return they are getting against the investment of their capital. He will analyze and he will assess and he will evaluate and tell in his report that so how much maximum return they are getting against the amount of capital the shareholders or the owners have invested. The last type of audit we have is secretarial audit. This is also a new concept of auditing. It is an audit which ensures that the corporate body's legal requirements have been duly complied with and in time. If there is any non-compliance noticed by the auditor, the management will be given a time to rectify the situation with less problem and with less cost. So under secretarial audit, it is conducted in order to know whether the corporate body or the business organization is fulfilling all the legal requirements or not. If they are not fulfilling any of the legal requirements, then the company will be given some time to rectify the same by the auditor. These are the different types of audits. Rest of the things we will discuss in the next session. Thank you very much.